Hi, everyone, and thank you for joining us today for our webinar, Benefits for Small Business Owners. My name is Kelly Blount, and I'm the Program Marketing Specialist here at General Electric Credit Union. We're so glad you've joined us as we have a great discussion planned for you, and we wanted to thank you all for tuning in from the comfort of wherever you're joining us from today. And with that, I'm going to go ahead and turn things over to today's speakers, Jamie and Russ from Saxon, to take us through today's content.
Good morning, everyone. This is Russ Goldner. I am a group benefits consultant with Saxon Financial. Also with us today is my good friend, the CEO of Saxon, Jamie Charlton, and let's go ahead and discuss how we might be able to help you as far as small business owners. So I'm going to go ahead and refer this first part of the program to Jamie, who is an expert in health insurance.
Thank you, Russ, and thank you, Kelly, for having us. Good afternoon, everybody. Hopefully we can take some time this afternoon to educate you on what to expect or what's important in small business benefits as we get through the fourth quarter. This is that time of year when everybody's plans, or 90% of the plans in the country, start to renew, and we get all kinds of questions about what's going on in the world, what should we expect from renewal, what are our options to change, how do I control costs. So quick rundown of our agenda today is to go through that. I always address healthcare as mother health, since it tends to steer most benefit decisions. It is a very costly benefit. It's the most important that you offer as a small business owner. So we refer to health as our mother health plan. Value of ancillary benefits, especially since the indoctrination of the Affordable Care Act and the COVID crisis that we had a couple of years ago, have become very important for clients. Small business owners prior to that weren't really sure how to implement ancillary benefits or what value they brought. Ancillary benefits provide a great value to your benefit plan. It can be offered at very minimal cost. We'll go over that for you as well today. Most powerful word in small business benefits, I won't steal that surprise. Russ and I will get to that in just a minute. And then how to utilize supplemental benefits. Supplemental benefits are your benefits such as Aflac, Colonial, Allstate. So I'm sure you've seen commercials around those types of benefits. But how do you utilize those to really create a robust benefit plan, regardless if you're 5 employees or 500 employees? And then at the end, the question we always get from clients: what is next? What's our solution? How do we go forward? So we'll cover that for you, and then wrap it up with some questions and answers. However, I am a believer that if you have a question on the top of your mind, please go ahead and ask Kelly to relay that to us during the presentation. I want to make sure we don't leave any questions out, or we get to the end and either run out of time or you forget what the question is. So if you do have a question during our presentation, please don't be afraid to ask, and we will do our best to answer it at that time. So moving forward, what's the reality we face today? So whenever we address a new client or a prospect or renewal, we want to look at what's going in the marketplace. And as many of you probably are aware, if you offer benefits today, right after your payroll, healthcare is the second biggest cost that you have. Sometimes, unfortunately, depending on the health situation of your group, it could be the largest, but we normally see it as the second largest cost that a small business faces, and then obviously you have your overhead and ops. But it's kind of eye-opening, I guess, is the best term I have, is that your healthcare benefits cost more than your overhead. So just to turn the lights on, you're paying more in healthcare than turning on the lights. So we always want to tackle that. The average medical trend we've seen the last few years has been 12 to 14%. As many of you know, if you stay up on current trends, that's not going down. And what we're expecting in the future, I said a lot of panels for carriers, and they're not slowing down. We're expecting costs to double in 4 years. That's good and a bad thing. Obviously, it's very bad from what I said, the first bullet point. Healthcare benefits continue to outpace inflation and our overall costs. It's good because medicine keeps advancing. Prescriptions continue to get better, and what used to kill us or create a worse lifestyle for us now cure us and or allow us to have that lifestyle, but it does come at a cost. And so how do we balance those costs? I don't think we're ever going to get to an answer of is it affordable, I guess is the right word, or not affordable, but is it expected, but more how do we balance that cost out so that it's not a drain on both you and your staff. As you see, most employers they're paying more and they're less satisfied. So how do we create that satisfaction for both you and your employees? What are we looking at from an employee standpoint? Employees' contributions for family coverage has increased 43% over the past decade. Again, not slowing down. In fact, one of the trends we see right now is a lot of employers are eliminating family coverage by creating a spousal cutout. Basically, if a spouse of one of your employees has benefits at his or her place of employment, they're being forced to go there. So how do we really take care of those dependents? How do we create a plan that satisfies that employee who needs family coverage? Again, kind of going back to the employer unhappiness, disconnect between cost and quality. Employees feel it just like the employers do. They're paying more, and are they getting less for it, or are they getting more for it? So that's a question that we always want to look at and answer. Make sure that the benefits that both the employer and employees are paying for are quality benefits, because it's a hard-earned dollar that's going to pay for them. And then the system. What kind of education is being provided to the employees to use the healthcare? It's getting harder and harder to navigate. We saw that with COVID when the healthcare system was shut down due to the pandemic. How do we navigate? There are, new telemed's been around for a long time. It really became into vogue during COVID. So we're getting a lot of use on telemed. How do we navigate between different pharmacy solutions that are popping up? So how do we make it easier for employees to use? And finally, kind of tying into that navigation problem we're having, how do we make the days of easy healthcare over? We got to think outside the box. How do we create innovative solutions that are working to keep costs down but provide quality care? Education is key. Employee engagement is key, and buy-in from you as the leaders of your company are big. You've got to be willing to think outside the box as we move forward in this healthcare world if you want to achieve quality, affordable solutions. The old days of bidding it out and moving to the lowest cost, although you are solving the issue of keeping your costs lower because you're moving to the lowest carrier, that trend continues to increase with each carrier that we move to. So how do we, not only do we find the lowest cost, but are we keeping quality benefits within reach of your employees is what we're looking for here. The old ways of just moving to the lowest carrier or accepting a renewal because that was the best alternative are going by the wayside if we want to look for both quality and low cost. So this is I like this slide. I use this slide quite a bit with our prospects when I'm talking to a new prospect. Most of our clients have seen this. But what's causing the run on healthcare? Why is it increasing? Everybody wants to give the employer or the insurance carriers a bad rep. They're just trying to keep up with costs. As everything cost does increase, whether it's a widget, a service, health insurance. Now, health insurance obviously is increasing a lot more than other costs, so I'm not trying to downplay that. But what's driving that cost? And this slide shows pretty good example of where our dollars are going when we utilize healthcare. Most of it is, as you'll see there on the left, is prescription drugs. For every dollar that's spent on premium, 22 cents is going to prescription drugs. It's the number one healthcare driver in America right now. Every time you see a TV commercial on at night, that's a new drug that's come out, and it's a very expensive drug. So the cost of healthcare, as I said earlier in the presentation, there's a price for the lifestyle that we choose to live. What used to make us sick or kill us, unfortunately, the pharmaceutical industry is creating wonderful solutions to those causes, and we're living longer, but it's taking more expensive medicine to do that we haven't had access to before. So in order to have those medicines, it's going to cost us money, and that's why you're seeing the 80-20 rule. 80% of healthcare costs come from 20% of the population. This one's a big one. 72% of health plan spend comes from pharma and costs associated with high cost claims, and then 2% of the pharma volume make up 55 to 65% of total pharmacy spend. So high cost specialty drugs are really driving healthcare up. if you look at doctor visits, what we use every day, outpatient care, that's 17 cents of care. Emergency room costs, that used to be a big driver. That's now 3.3 cents. So really, how do we look at our lifestyles? How do we look at the prescriptions we're taking? And education. Again, education is the key to everything. Are we taking preventive measures? Are we using primary care first? Are we using telemed first? Are we trying generics? So those are all types of things that if we spend a little bit more energy on how we utilize healthcare, we can cut down on our costs. All right, so when we're looking at Ohio, I'm assuming, and I apologize if I've assumed wrong. I know GE does have a presence in Northern Kentucky, so some of this will be applicable to you as well. But the Level Fund and Anthem United are definitely in Kentucky. But from an Ohio standpoint, the 2 to 50 market especially is segmented into really what we call the MEWAs and then level funded plans. So United Healthcare, Anthem, and Medical Mutual all have a MEWA platform, which is basically a pool of benefits that small businesses can utilize to lower their cost of care. Level funded plans have been around for quite a number of years. They are a form of self-funding, really depending on what level of level funded plans you look at. Some are very basic, and then you have some that perform more like a self-funded plan that they're designed to look at. But the difference really comes down to who's eligible and then how you want to fill out applications. I know a lot of folks don't like to fill out applications anymore. So if you go to, underwriting, which is the fourth bullet point down, you'll see there's different options there. So I show you this slide only to let you know that there are options available to you in the marketplace if you're 2 to 50. I walk into several clients or prospects and they feel like there's no options available to them because of their size. It doesn't matter if you're 2 or if you're 500. There are a lot of options available to you. If you're 51 plus, and that's why I don't have a specific slide for you, if you have more than 51 employees, there's lots of options for you available. But where we really see the crunch when Russ and I talk to our prospects, it's in that 2 to 50 space. They just feel like their hands are tied. So I really wanted to focus on this slide to let you all know that there's several options available to you in the marketplace. I tell clients, when the Affordable Care Act was passed, it was actually it was a blessing for small business. Before the Affordable Care Act was passed, there really wasn't much choice. You had your different carriers. You submitted your applications. They could not deny you by law, but what they did is they would raise your premium from a 0% increase up to 150, up to 125, 150% above that 0% to encourage you not to want to come to them because of the price. Well, what the Affordable Care Act has done is it set a ceiling if you're in that situation where they can only raise the rate so much on you, but then it also created other opportunities to be underwritten. So if you're a healthy group between the baseline premium and that ceiling that the Affordable Care Act set for you in that 2 to 50 space, it really has provided a lot more options for you to look at and consider when offering benefits or at open enrollment during this time of year when most of us are open enrollment. It provides a lot more options for you. You just have to be willing to go to work and do a little bit of upfront work to find the best fit for you. And that's what this slide really is meant to show you, all the options and what's involved in it. But if you're willing to do some work, I'm sure there's an option available for you. Okay, so what do we hear all the time when we're talking to small to mid-sized businesses is, hey, how come I don't get any analytics? How come I don't get any reporting? I've got a friend who is HR, CFO, or CEO of a 150-person group, and they get all kinds of great stuff from their insurance company or their consultant. Well, those are coming more and more down. They're not readily available for a lot of carriers in the space, especially the under 50 space. 51 and 99, we're getting better, but there are some alternative plans that are coming into the marketplace that are providing these reports for you. So if you want these types of reports, CFO value add, get your data analytics. Where are my claims being spent? Am I spending money on high dollar pharmacy? Am I spending my money on generics? Are my people using the emergency room? Those types of questions that we get all the time. There are entrants into the small group market now that will provide that type of reporting for you. Again, you just have to educate yourself and be willing to do a little bit more work to work on those plans. But if you are, we do have clients that are receiving this type of data now, and it's very nice to speak with the CFO, HR, CEO, et cetera, on where your claims dollars are being spent. So if you're not seeing those types of options presented to you, ask a consultant to go to the market for you, because they do exist. From an HR standpoint, on top of the value adds that the CFO wants, there's always the HR that cares about the employee side of things as well. So if you're not using a benefit administration system to do your enrollments, your terminations, the ads during the year, I would talk with your consultant about getting you onto those. We work with clients down to 5 enrolled on benefit administration system. It makes the education much easier. It allows for employees to see the benefits up front, allows them to make comparisons, takes a lot of paperwork off of the HR team as well. So I would certainly, regardless of what carrier you go with, your integrated ben admin system is agnostic of carriers. So you should have a ben admin system to rely on to help make your life easier. Cost containment solutions, are we working with carriers that are providing education on different solutions? Do we have telehealth included? Is generic included? Is there incentives to use different doctors? Those types of things. Cost saving investigators. When does a carrier start to audit claims? Is your program or is your plan paying for claims that they shouldn't be paying for simply because it wasn't audited? Different carriers have different levels of auditing. Now, is it efficient for some and inefficient for others, depending on the size? Absolutely. But again, going back to questions to ask your consultant, what does a carrier look for? When does a carrier investigate? And it may not impact you directly, depending on the type of plan you're on, but it does impact trend. It does impact total spend for a plan, which ultimately gets passed down to you. So those are important questions. And a patient assistance program, again, something that's becoming very in vogue. In fact, I was reading something in my briefs this morning about this with Mark Cuban's company. More carriers are reaching out to him to talk with him about it. But are you, those high cost drugs that I showed you earlier that are driving all of the healthcare costs, are you being educated, or is your team being educated on how to reach out to these manufacturers and source prescriptions either at cost or for $0 if your employees qualify financially? So all types of different things out there to help your employees not burden the costs that they're being passed on to as well. So new entrants, this is what I was just alluding to a little bit earlier versus, all the traditional names that we're used to in the healthcare world. You usually don't hear about these, or you didn't until the last couple of years because they were mainly catering to the large group. But a couple of them have figured out how to come to the small group space and have made it very beneficial for small groups. Now, it's not going to fit everybody. So I want to put my cautionary hat on here and just say, hey, I'm not out here touting this for everybody. The traditional players are a good fit for most people. But if you're willing to think outside the box and get a little creative and roll your sleeves up, there are other carriers now coming to the space that really want to work with you. Generally, it have to be 20 enrolled. So again, they haven't gotten it down to the micro groups yet. But if you have 20 or more enrolled on your plan, again, talk to your consultant about options for you. And what it does is it allows you to take a 3 to 5 year mindset instead of playing the game every year where you're looking at a new carrier every year. This allows you to put a 3 to 5 year strategy in place when it comes to your healthcare. I'm not sure about you, but most of our clients want a nice strategic strategy that they can budget around each year. This allows you to do that, and then it allows you as an employer to pay what you deserve. I won't get too much into that. That's a whole other presentation, but it allows your premium dollars to be spent on what your group pays for versus just paying that into a giant pool. If you have a really good year, you're not rewarded. If you have a bad year, you don't know where you pay those claims. This allows you to see where your dollars are being spent, and then you get the satisfaction of knowing, hey, we had a really bad year, so I paid for it, or we had a really good year and you're getting money back for that. So something to talk to consultants about if you're willing to think outside the box and look for a solution that's new to the market. Russ, would you like me to continue on the ancillary benefits? You'd like to take over on this one?
Okay, thank you, Jamie. Yes, let's talk about the power of ancillary benefits. I've been in the ancillary benefits business for probably about 20 years now, and I've seen a lot of increase in interest in ancillary benefits over the years. And the reason being mostly is that even with a good health insurance plan, and other types of core benefits, there's always a financial gap in the event if someone has a injury, an illness, they're off work for a period of time because of a surgery, things of that nature. A lot of the ancillary benefits can really help out quite a bit in filling in those financial gaps. So ancillary benefits, we can talk about things like dental, vision, short and long-term disability, basic and buy-up life insurance. So there's a lot of different plans available out there, a lot of different carriers. And one of our jobs here at Saxon Financial is to basically look at a number of different opportunities for you. We are not what they call a captive agent. And you might have worked with captive agents before, whereby they just represent one particular company. Here at Saxon, we can basically shop around at multiple different companies and find the best situation for you and your company. So dental, people know what dental is, vision, short, long-term disability, life insurance, all these important things to really help with attraction and retention of good employees. It's getting sometimes harder and harder to find those type of employees. And sometimes we think we found a good one, and all of a sudden they decide to leave because they're not happy with the benefit package for whatever reason. And we did all this training and all the expense involved in bringing that person in. So the idea is to have a more robust type of employee benefit plan available to you and your employees. And you can see here with some of the statistics that we've come up with back in 2021, we can see anywhere between 1 and 10 employees have offered 2.37 different lines of ancillary benefits. And you can see 11 to 50 employees offered 3.88 ancillary lines of benefits, and 50 to 100 employees offer 5.06 ancillary lines of benefits. Typically, we'd like to add additional benefits. We don't necessarily like to add too many at one time, but we want to make sure it's affordable and it can be budgeted properly to all of your employees as well. But there's some basic things here that really will help, drive, the opportunity to bring in good people, to keep your people happy and satisfied with the present benefit plan. Kelly, if you can go on to the next slide, please.
Yes, and before we do, we actually do have a question. It's asking, how long does the process take from start to finish and offering benefits to employees?
So I'm going to take a stab at that, thinking I understand it correctly, Kelly. I'm going to come from it from the standpoint that it's a new group. It's a new group, meaning that they have no benefits to begin with. Usually it takes about a month to get set up. What we'd want to do is, meet with the employer, discuss his or her goals, and then go to the market to find those solutions, and then implementation. So I would say anywhere from 4 weeks to 6 weeks. If they're a current group, and if they're a current group looking to shop, I'm going to say this, and my team, if they hear me, will come in and shoot me. We work with groups that we've transitioned in a week, but generally we like to, work 3 to 4 weeks. It just makes everything smooth for the group. Make sure we get them set up, that the employees are educated on what the new benefits are going to look like. But if it's something where a ball was dropped, unfortunately, we've done it in less time than a week. So I guess it's a very vague answer. It just depends on a specific situation, but we prefer 4 to 6 weeks, but we've turned it around very quickly.
Thank you. I'll go ahead and switch to the next slide for you.
Okay.
There we go.
All right. So the world of voluntary benefits, some companies are utilizing voluntary. What I mean by voluntary is, And you'll see is things as much as critical illness plans, accident plans, hospital plans, life insurance plans, things of that nature, whereby the employees typically will pay 100% of that particular cost of those plans. So a lot of times the employers are more than happy to basically add that to their benefit package, because it doesn't necessarily have to cost them any money out of their own pockets. These are plans that are paid by the employee. They're paid at a discounted price because we would recommend them being payroll deducted for a number of reasons. A lot of these plans, such as the critical illness and accident plans, are pre-tax, much like health insurance. So therefore, you're saving money as an employer standpoint from both payroll taxes and matching FICA. And a difference to that, or in addition, is that the fact that these are all portable benefits, the voluntary benefits, which the employee likes as well, because if they ever leave the organization for whatever reason, moving out of town or out of the state or retiring, these plans are portable. So again, the employees like these plans that are available to them, such as accident, critical illness, hospital plans. In addition to that, these plans, you can cover a whole family on these plans. For example, the employee can cover a spouse, as well as children up to the age of 26. Even the children don't have to be living at home at the time to have them covered. Something does happen relative to any kind of injury or accident or surgery, things of that nature. At least there's available money. As I mentioned, relative to the ancillary benefits, this is available money that they can receive after, filing a claim, which is a very simple process. They can file claims right online, and typically, if everything's in good order, then they would receive basically a check in the mail or EFT right into their checking account within a couple of weeks of time. So again, employees like this, these are wonderful plans that don't necessarily cost you, the employer, let's say, any money at all. All your obligation or responsibility would basically just paying the invoice. So the way that would work is that all these payroll deductions that you make on behalf of the employees, that would go into, let's say, a company checking account, and then you would be billed in arrears, which means that, let's say, for example, we started these plans effective January 1. Your first invoice will not be due until beginning of February. Therefore, you've collected all the premiums from your employees that you would utilize to pay the invoice on these voluntary benefits. Kelly, if you any questions at this point, if not, you can move to the next slide. So this is how we utilize supplemental, and that's just another name for voluntary benefits, if you will. But you can see here what I kind of touched on prior is accident, critical illness, cancer, hospital indemnity plans. These are the most popular plans that are available out there today. As I mentioned, the interest in these plans have been growing and growing. Why? Because you're providing a more robust package that you really don't have to pay for yourself, but the employees can pay for it at a discounted price because it is payroll deducted. But again, it gives them an opportunity for you to go ahead and attract, retain valuable employees in your organization. In addition to that, let's say, for example, you're a relatively new startup company and they don't necessarily can afford to provide health insurance, or that's something that you don't want to do right now, then you can provide the supplemental or voluntary benefits to the employees regardless of that, so they can still enroll in things like accident, critical illness, cancer, hospital plans, without having to do any kind of health insurance at that point in time. And as your organization grows and becomes more financially healthy, then you can always look at adding health insurance at that time. So additional to that, a lot of the major medical plans, the health insurance plans today are having higher and higher deductibles, which I'm sure you've seen. And the reason being mostly is that kind of keeps your costs in line for the health insurance. Obviously, premiums going up, but the increase in healthcare relative to relative to drugs or to people's general claims situation and health history. But there are a lot of triggers that will increase your premiums of your health insurance every year. This is one thing that will help tremendously. So, for example, let's say someone has a major automobile accident, and God knows that they have let's say they have a $10,000 deductible on their health insurance plan. Well, there are accident plans out there that can pay multiple numbers of dollars and cents depending on the severity of the accident or injury. And you could probably recoup a lot of that out-of-pocket expense that you would normally have to pay for yourself because you're stuck with that $10,000 deductible, if you will. In addition to that, let's say, for example, God forbid someone has cancer or a critical illness, such as a heart attack, stroke, and so forth and so on, and they have to be hospitalized and treated as a result. In addition, you could probably include the hospital indemnity plan as well. You would receive a lot of money by filing claims, multiple amounts of dollars and cents that really could help offset deductibles. In my example, let's say it's a $10,000 deductible or whatever it might be, or a $5,000 deductible. It could be a family deductible, so forth, with multiple people, unfortunately, might have to be sick. But at least you have monies available to you to pay those dollars and cents. But what's nice beyond that is that these dollars can be utilized any way you wish. These dollars are tax-free. So all these plans that you see here are pre-taxed, can be pre-taxed as well as tax-free. There's not too many things on this God's green earth that you can get two tax benefits in one: the pre-taxing and the tax-free after you file a claim. So that's very helpful, and again, employees like that tremendously. Jamie, you want to take it from here?
Sure. So it's kind of a rhetorical question when I brought it up in the agenda. What is the solution? There really is not a solution that fits a common group. It is really a specific solution for each client that we work with. We went over a lot very briefly with you in the last 30 to 40 minutes, and that's on purpose. The reason being is there's no silver dollar for everybody. Everybody's going to be different. Everybody's got an aging workforce. Everybody has a younger workforce. Right now we're at a time where it's very unique. We have three different generations in the workforce. And we have the baby boomers who are at the end of their careers, but are still actively in the workforce. We have the Gen X, and then we've got millennials and Gen Z are now coming in. So we've almost got four different workforces that rely on different means of communication, different means of education. So again, the solution is a rhetorical question because it really applies to how your situation unfolds as we dig deeper into it. The point is think outside the box, continually investigate what's available to you. This is a very dynamic, changing workplace, very changing, dynamic marketplace. New things are coming online all the time, every day. The solution, 99% of the time, is not simply to take the renewal and be done. If you get a good renewal and you're happy with your current benefits, great. But I would at least encourage you to see what's available in the marketplace. Even if you take your renewal, see if there's something out there so you're aware. Maybe it doesn't fit this year, it'll fit next year. But everybody is unique. So the point of this question, the point of this slide is make sure you take time to investigate. If you are truly interested in saving premium for continuing to provide quality benefits for your team, investigate what's available in the marketplace because it's continuously evolving. All right. With that, we will turn over to questions. I know we went through very quickly. Again, want to give you a highlight of what's available out there as you approach this fourth quarter and open enrollment. Most of us are approaching that open enrollment time. I just wanted to have refresh your minds to think about new ideas, new opportunities. So don't want to get into the weeds too much, but I'm more than happy to answer any questions that anybody has.
We do have a couple more questions, so we can go ahead and jump into the first one. That being, what sets Saxon apart from other companies that offer benefits?
We are, I will say this, again, without knowing specific situations, speaking in broad generalities, hopefully you can tell by the presentation today, we think outside the box. Depending on the size of the company, of the person asking the question, our specialty, was what made our name was, we work with small group. That's our niche. So we bring alternatives that are customarily used for larger groups down to the small group. We're willing to work with a group to get dirty, to make it a better situation for their employees and for the employer. Our answer isn't just take a plan and sit there for 5 or 6 years because you're getting good low renewals every year. We want to work and find creative. We work for it. We work for the clients. So I'd say that's one thing that sets us apart. And the other thing that sets us apart is we've invested both in technology and people. You can pick up the telephone regardless of what size you are. If you're 2 employees or 1,000 employees, we have both. And call us and get a live person every day of the work year. So, but we also have the technology platforms to allow you to use the benefit administrations, to use electronic enrollment, to use electronic applications. So, in a nutshell, without going into too much details, because I don't know the specifics of the person asking the question, Kelly, that's the generalities of what I believe set us apart.
I'd like to add to that real quick. So as Jamie was mentioning, we are a local firm, so we provide a lot of personal attention and servicing. We're just as sophisticated as far as what we can bring to the table to a lot of national firms. But instead of, a lot of your employees having to call a 1-800 number or listening to beautiful elevator music, you can get to our people through our people very quickly. And if it's a service issue or a question or a problem, that's what we really, I feel, excel in and helping any way we can.
Thank you. And then it looks like this is our last question. In general, are there any hurdles that need to be considered when reviewing benefits?
The primary hurdle, we do run into this quite a bit, and it's unfortunate. The primary hurdle is looking at the healthcare conditions within the group. Going back to the little bit of a focus I put on prescriptions today. The prescriptions are wonderful because obviously it provides us a lifestyle that without that prescription we wouldn't be able to live. But those prescriptions do cost money, and so when we go into a prospect, the first question is, hey, are you guys healthy? And everybody's, no, we're good. And by all means of intent, you are healthy because everybody's at work doing their thing. But, are you healthy because of a prescription or a condition, that's being helped with a prescription? And the reason I'm dwelling on that, Kelly, is because that's where a lot of employers will get frustrated. So we'll come in and, we'll do applications or underwrite with the carriers, and we'll go to market for all the carriers. And then we'll come back and the rates are higher or they're not better than where they currently are. And that's because, of prescriptions. And so, the hurdle, to wrap it up in an answer, the hurdle really would be to know your group. Now, are there ways around those hurdles? Absolutely. And those were the alternative carriers I was mentioning, today. There's programs out there that carriers are now working with to make that less and less of a hurdle. But that's the biggest hurdle where I'd say expectations is set, is to, go in with it with an open mind, knowing that it might take a little work, that may not pay off, but 80 to 85% of the times there's an alternative available, for that group. They just got willing to work for it. So really the biggest hurdle is opening your mind and doing a little bit of work. If we or your consultants say, hey, we got to do X, Y, and Z to get results, be willing to do X, Y, and Z. What we have found are those clients that don't want to take that extra time to investigate the marketplace are the ones that are usually stuck.
All right, thank you. That is going to go ahead and conclude our Q&A session for today. If you think of a question after today's webinar, Jamie and Russ's contact information is up on the screen if you would like to reach out. And then quickly before we close things out, I'd actually like to pass things over to GECU's very own Jason Jones to share about what he does here at the credit union and touch on the things that our business team has to offer.
Thank you, Kelly. And thank you, Jamie and Russ, for the wealth of knowledge you've shared on the various benefits available to local small business owners. We really appreciate you guys and your partnership. As Kelly mentioned, my name is Jason Jones, and I lead a treasury management team here at General Electric Credit Union. As a nonprofit credit union, our goal is to form a productive relationship with our business members to become their trusted financial partner and help guide them to success with our knowledge, experience, product offerings, and network. As a result, we're able to meet their personal and business needs by offering competitive and innovative products, services, and industry-leading rates to help our members manage their cash flow, mitigate risk, and ultimately grow and attain their goals. And to add value for our members and the local tri-state community, we offer these types of webinars to assist in improving the quality of their financial lives. So please feel free to check out the multitude of resources available on our YouTube page when you get a moment. But if we can assist you or your business in attaining your goals, or if you just want to learn a little bit more about what we do here at GECU, please don't hesitate to reach out to us here. But again, my name is Jason Jones, and I'd love to talk to you anytime.
All right. Thank you, Jason. That concludes today's webinar. Once again, thank you all so much for joining us and have a great rest of your day.